everybody. This is Black FX 101 Forex Education and Mentorship. I welcome each and every single one of you in the name of our Lord Jesus Christ. Amen. This channel is pretty much new, guys, so we are trying to grow it by providing valuable education and information that each and every single one of you who are interested in learning how to trade and actually change their lives for the better. So I want to take you on a step-by-step lesson whereby I teach you the very fundamentals and core foundation of the market, right? Because as we know, the market is a very broad thing, so it needs to be broken down into small bits so that each and every single one of us can be able to understand even the most complex details that we come across in our learning journey. So without wasting any time, let's just get to it. All right, so today I've prepared some topics that I want to uncover or probably explain with greater detail and demonstrations for those beginner traders who do not understand what is happening when price moves up and down, because most of you just see the market printing candles that are going up, and sometimes they go down, sometimes they just range in one place, and you're asking yourself as to what is happening, what is really happening, and you don't understand what is being printed by those candles. So I'm here to help you understand and probably hold your hand and walk you through this journey up until you are able to fly. So let's get right into it. So here we're going to identify what a market structure is. So how to identify a market structure? So first things first, whenever you step on the charts, you need to make sure that you understand the structure of the market or the behavior as to how is the market printing, or what is the current pattern that you need to actually see so that you can be able to make informed decisions whenever you want to take your trades, right? So we have a market structure. So what is a market structure? So a market structure are basically patterns that we see on the market. So when the market is moving to the upside, for instance, it is creating higher highs and higher lows, then so for instance, it is, sorry about that, guys, I just wanted to see the down panel here so that I can be able to find my tools. All right, so let's use the lines. So whenever the market is printing, creating higher highs and higher lows, we call that a market structure, right? Because we have a low that was created and price pushed upside and made a new high, and then came back down again, creating another low, and then went back up again and created another high. So what we have here, it is a pattern of swing low, swing highs and swing lows, right? Because it starts from the bottom, pushes to the upside, and then comes back down again, and then pushes to the upside once again, taking out that previous high that it actually initially created. So this pattern that we see here, it is a bullish market structure, right? We're going to get into deeper detail when we get to number 4, so that we can explain as to how to identify a bullish trend in the market. All right, okay, guys, so we're gonna have to we're gonna have to continue explaining what market structure is, so that we can understand in a very much broader view as to what are we looking for. So in most cases, right, when people try to identify the market structure, they tend to miss a lot of important information and a lot of important points that they need to focus on. But so hopefully by the end of this video, you guys will be able to know how to mark your levels, to know how to identify the market structure in a proper manner. So let's make an example now of a bearish trend, right? A bearish market structure. Let's start it that way. So we're gonna have a price creating a swing low, then pulling back to a point of interest, then pushing low again, taking out the previous low that was created, and pulling back and creating another low and another lower high and another higher low, sorry, and taking out that one. So what we see here, this is what we call a bearish market structure, right? So price is making series of lower lows and lower highs. So a bearish market structure is when price makes a series of lower lows and lower highs, right? So market structure, as we explained it earlier, we said that it is a series of price movement creating highs and lows. Okay, right. So now for us to be able to create our analysis in the market, on whichever instrument that we decide to trade on, be it GBP USD, because that's the one that I love the most, and I also love gold as well, but gold is very volatile, and yeah, it has buried a lot of people. Hopefully you guys can testify too. Okay, so now when we understand what market structure is, now that gives us the basis to be able to determine the trend. So we get the market structure now, right? Now we want to determine the trend. Where are we going? What is it that the price is trying to show us? And what is it that we can capitalize from and enter our positions, so that we can be in a place whereby we are able to make profit. Because remember, each and every single time we place a trade, we want to make profit. Just like running a business, an entrepreneur sees an opportunity in the market, finds a gap, and their only motive is for them to make profit, right? So we all agree on that one. So now let's determine what a trend is. So when we speak of a trend, right, so a trend, it is when the market is making impulsive moves to a certain direction and correcting afterwards, right? And making continuous break of structure. We're gonna get to a break of structure as to what it is. So you just need to keep abreast to the terms that we use, because what I am teaching you here, these are ICT concepts, right? I am an ICT disciple. I am an ICT offspring, right? So ICT is what you're going to be learning about. Even if you decide to join our mentorship program that we offer, you're going to be learning a lot more about ICT concepts, everything that there is to know about the algorithm and how price is booking and what you need to look for. All right, so when we're looking at a trend, we want to see a market that makes a push to the upside and then corrects that and then makes a break of structure or takes out that previous high that was created and come back again and take out another one, right? So the pattern that one can identify here, that we all can see, is that price had an that. All right, so we want to see price having an initial low that it starts from and then pushing to the upside, creating a new high, then come back within the range of this price run that it initially created, and then push up again, taking out that high, and then come back inside this range that it created again, and then push to the upside, taking out that high. So what we have here is what we call a bullish market trend, right? So this is called a bullish, this is a bullish market trend. Let me just type it right there. Bullish market trend, right? So this is what we see when we are looking at the market and try to identify the price's direction. So as we can see here, we have a higher low, a higher high, a higher low, another higher high, and another higher low, right? So these are pivot points that serves as a very important price level, right? So whatever that we do next, it is going to be based off what we see here in general, right? So if I can just mark this level so that you can know. So that's a higher low. Whenever we talk about this, you can understand what we're talking about. And then that's a higher high right there, right? So try to learn these abbreviations because as going forward, we are going to be using them a lot, right? So that you can understand what we're talking about, because it would take so much time for us to write a whole sentence or a phrase trying to explain what we're talking about. So we try to save time as much as possible because we understand that time is a very important currency in life. Right, so now we have identified what a bullish trend is. So we know what a bullish trend looks like. In fact, we know what a trend looks like, right? Because I was supposed to get to that number 4 when I'm done with the trend. So I was just trying to explain the trend. A trend is when price gives displacement to a certain price level and then pushes back inside the range and then takes that out again. So now we have created what we call a trend. So we have what we call a bullish market trend right here. This is what we see. So let me just continue with that. I'll come back to what a price range is. Let's just discuss what a bearish trend is too, so that we can be able to know that we have completed the trends in our markets. So with the opposing price direction, we want to see price having an initial high and heading to the downside, creating a low, a swing low, then a swing high, then a swing low, a swing high again, another swing low, right? So this is what we call a bearish trend in the market. This is when price is making a series of lower lows and lower highs, right? So we call this a lower high right there. Let me put a text on it so that you can be able to take your notes too. We call that a lower high because it is the low that created the bearish price run that we see, right? So this is called the lower low because we are in a bearish market trend. So whenever we have this certain type of market structure, you must know that you are dealing with a bearish market. So the market is going down. I know some of you have heard in the news whereby they say that the stock market has crashed and people have decided to sell their stocks and people have lost money, blah blah, but you do not understand what they're talking about. And when you step on the charts, you just seeing all these patterns that are very complex for you to understand. So basically, this is what they're talking about. Whenever the market is selling or when buyers are losing pressure and sellers step in the market, this is what you're going to see. A bearish price run. Price is going to create these pushes to the downside and having lower highs and lower lows. Are we together? Okay, so I think now we understand when we talk about a trend in market that is bullish and a trend in market that is bearish. All right, guys. Okay, so now we gonna. I was just gonna put the text right there, indicating that we have a bearish market trend right there. Okay, so that is a bearish market trend. So the difference between these two trends or market trends that you're seeing here is that whenever we are talking about a bullish market run or market trend is when we note that we have higher highs and higher lows. So the market will create a series of higher highs and higher lows, just like you see this moving arrow as I have demonstrated for you. So when we have a bearish market trend, price will create lower lows and create lower highs, right? Another lower low and a lower high. So a series of the combination of these two variables creates a bearish market trend, right? So now we also have another instance in the market, right, whereby the market will just be moving sideways and not creating any direction whatsoever, right? And most people tend to get confused as to what is happening now, right? Remember, guys, that the market is driven by a lot of factors, and as traders, we tend to believe in different market movers. So when I say market movers, I'm talking about in excuse me, each and every factor that affects the price movement, right? So most traders, they trade fundamentals. They believe that for price to be able to create a move or a displacement, it has to be perpetrated or propelled by a news event that occurred. Maybe Donald Trump wants to announce something and he wants to impose tariffs on other countries. Therefore, that will create a lot of noise on the charts, right? As we have seen in the past months, if you guys were following the economic news and geopolitical news, right? So as a trader, you have to make sure that you keep abreast and you stay informed with each and every single thing that is currently happening across the world and in your country as well, right? Because all of these things tend to influence the market price direction, right? So most people, they tend to have a belief that price is moved by these fundamentals, right? The news events that take place across the world. And other people believe that market sentiment is the initial driver of price. We are still going to get into that. I think I'll have to make a separate video discussing all the factors that drive price in the markets, right? But today I just wanted us to step on these 7 points that I have indicated here, right? So now we have our bullish market trend and we have our bearish market trend. And now we have what we call a range. So what is a range? A range, it is when price is only making highs and lows but not breaking through them, right? So price just creates a series of highs and lows but staying in one range. It's like you have just put popcorn corn, right, inside a saucepan, right, and then you heated it up on the stove and you close it with a lid. So these popcorns, when they pop, they just jumping up and down inside that saucepan, right, without escaping or pushing out the lid or doing anything of in that nature, right? So that philosophy that you take from that applies the same way when we are speaking of a ranging market, right? Price is just moving sideways. It is not making any direction whatsoever. So we tend to see a lot of this whenever we trade the live markets, right? As you guys step on the live charts, you're going to see that as well because this is mainly intended to educate beginner traders, people who are just getting started in their trading journey and want the necessary knowledge and help for them to be able to succeed or to be able to gain the necessary knowledge and necessary trading experience that they need, right? So you need to make sure that you grasp each and every information that you learn and sift out what is not going to help you, because as you grow in this journey, you need to be able to identify what works for you, right? So the market is a very broad and dynamic thing that needs one to understand what type of a person they are in order for you to find an edge in this market. So for me, this is just the foundation, a building block, right? Just like an atom, right? When we speak of science, when we have atoms and particles and all those cells, the tissues and everything, the organelles, right? So these are just the building blocks that are going to help you to be able to understand and have the right knowledge, um, um, thereby constituting an edge for you in the market, right? Okay, so let's get into the range and let me demonstrate what a ranging market looks like. So a range, we have said that it is when price is creating highs and lows but without breaking them, right? So it's just moving sideways. Price is moving sideways, making a low. Sorry about that. So price is just making a high, then make a low again, make another high, make a low again, make a high, make a low, right? So what we see here in this model that I've just drawn on this screen, right? It's whereby price had an initial low and created another high, but came back again and created another low close to that one, or proportionately sweeping that one out, right? So you're gonna hear more of these terms, right? ICT concept terms. I'm gonna be just dropping them like a mic here, so that you can get to be familiar with them and how things work out, because I'm going to be explaining each and every single thing that I talk about. So if you have a question, please just drop it on the comments section, and make sure that you don't forget to subscribe to our channel so that we can grow this channel and educate more people in terms of how to trade the market using ICT concepts, right? So the market here is ranging, it's going sideways without making any directional movement. It's like a car that is driving on a slippery road and it's busy swerving sideways without taking a fall on the other side, right? So we do experience this type of market conditions whereby price just decides to range in one place without making proper movement or direction by displacing in one side and taking out a high or taking out a low. So we call this a range. It's like popcorn in a saucepan, just jumping up and down, right? Okay, so now let's talk about breakout structure. We also have something that we call breakout structure. Okay, I just wanted to explain each and every single point that I have alluded here before we can go to the charts, right? The actual chart market, right? Whereby you can get to see what I'm talking about here in a candle form. So let's just start here and cover everything. Then we're gonna go to a live chart market, so we can be able to identify what we are talking about here. Okay. So we have what we call a breakout structure. What is a breakout structure? A breakout structure, it is when price makes a swing high and breaks a previous high that it had created. If you notice here, let me have my trend line. If you notice here, price broke above that high. It created a higher high for us, and then when it pulled back into the range of this price run, when it decided to push upside, it broke through the high that it had initially created. So we call this a break of structure. When this happens, the market is making what we call a break of structure, thereby signaling or telling us that it is ready to push towards a certain direction, right? So that is a tool that indicates to you that we have a breaker structure right there. So price decided to close above the high with multiple candles. Remember this, guys. I'll also have to make a video again explaining what true breaker structures look like, because there's a lot of misconception when it comes to breaker structure. People tend not to understand how breaker structures happen, because the market, hence I said to you earlier, it is a very dynamic thing, thereby it always seeks to destroy those who are naive and those who do not pay careful attention to detail, right? So you need to pay careful attention to detail. Your mind needs to be in the right place, your emotions need to be controlled, and you have to be able to identify properly what each and every concept looks like when we step on this on the live charts, right? So whenever we have a high, price creates a low, then it breaks that we call a breaker structure. A low, a high, a higher high, a lower high, a higher low, and then price pushes upside again, displacing upside, creating a breaker structure. So this market is bullish. So these things, these are the factors that also signal to you that the market is bullish. Same applies when the market is bearish. Price will just create a lower low and come back in the range to rebalance here and then swing downwards again, displacing to the downside, breaking structure right here, right? Let's mark that so that you can see what we're talking about. And price will tend to break structure right here, right? Right there, that is a breaker structure. Let's clone that. We have a breaker structure there and again here, right? So price makes a swing low and a swing high, then break structure on the previous low it had created, right? So what we have here is a bearish market trend, right? The market is going down, it is selling, people are selling, right? As we have GBP/USD as our pair, prices, when price goes up means that people are buying, so we have buyers in place here. Let's type that. These are buyers, and whenever price is making a series of lower lows and lower highs, we know that people are selling. So these are sellers, so buyers and sellers. But when we are in a range, meaning that neither of the two have enough pressure or enough momentum to push price towards their direction, right? So we experience what we call a range in the market. This is a range. Then we have the low, and then we have a high right here, right? So this is how price looks like. So you need to screenshot this so that whenever you are learning alone in your room, in your back room, or wherever you are, you can be able to just run back and rewind each and everything that we're talking about and get to teach yourself how to identify these important pivot points and important market trends that we just spoke about on this video, right? Okay, so now let's just jump straight to the real and actual market, right? So that we can be able to identify and learn how these things show or print when we are on the live chat. So these are candles, guys. So we call these candlesticks. They have a candle body and a wick, a candle body and a wick. So these long and short sticks that you see below a body of a candle, we call them wicks, right? I'm going to do a separate video on that, explaining what a candlestick in the forex market looks like, right? and breaking it down in all the different types of candle patterns that you can look into. But here on ICT, we don't use mostly candlestick patterns. We just focus on liquidity, we focus on market structure and imbalances and all those sorts of things, right? So here we're going to be looking for a market that is creating lower lows and lower highs, right? If we can see here, the price started off in this level and pushed downside, creating a lower low, and then it went back straight in the range that it had created previously and filled orders right there, right? So price goes back to fill orders that it had left behind, and then it came down and pushed straight to the bottom, taking out a lower low that we created previously, coming back inside again and leaving that lower high there and pushing back to the downside, coming back to the inside and pushing back to the downside, right? So here we can clearly see that we are in a downtrending market. This is a bearish market structure. So what do we need to do? We use our tools in order to mark all of these important price levels so that we can be able to tell or identify properly where price is going, right? We need that. We need to know how price is booking, how price is moving, what is the direction for us to have a solid narrative for the day as to where we are going. You must be able to identify all of these important aspects, right? So here we see price created a breaker structure right there after it had pulled back into the range, creating a lower high. Then it pushed downside again, creating another breakout structure. So we're going to mark all of them so that you can see. Guys, there's a lot to learn when it comes to price movement. And I think you have to have enough time and allow yourself enough time to learn and not rush to make money or to do anything that you see here on these YouTubers who are flaunting and posting all of those things that are very flashy and hashy, but without providing you with fundamental knowledge and information, or rather education, right? So in this channel, we're just focusing on providing you guys with the necessary education so that you can have confidence whenever you are stepping on the charts, right? You know that you can be able to make trades confidently, so having the right knowledge that has been imparted to you. All right. So as we see here, we had a breaker structure, price pushed to the downside again, came back inside this range, inside the range. This is a range, guys. We call this a range from that lower high to this lower low. So this is a range. Price needs to balance here. We're going to talk about balancing of price and inefficiencies and all of those things for other videos that I will have to make. But don't forget to make and drop your comments on the comment section, and also subscribe to the channel so that we can grow the channel, and hit the notification bell so that you can be able to be notified when a new video is being dropped. Alright, so as we see here, we continue to make breaker structure to the downside, again coming back in the range and then creating another breaker structure. So what we see here is a market that is very bearish. It is trending to the downside. So we call all of this a bearish market trend. All right. So now let's look at a situation whereby price now is making higher highs and higher lows, right? So as you can see here, we started off here where price failed to create a proper price run or breakout structure to the downside. Thereby it came back inside the range and took out our initial low that started the downside price run, right? So we had a build up here whereby price now is starting to show us that it had lost pressure for sales, Now buyers have stepped in the market. This is whereby we see a break of structure, a high being purged off, or a high being breached, ran through, broken through, right? All those terms that you want to use, it doesn't matter what term you use, but as long as it speaks of what we are seeing here on the charts. Again, we had price pushing upside, creating another break of structure right here, right? And this is a very important thing that you guys need to actually learn and make sure that you understand, because some of these breakout structures, right, they are not solid enough to give you the right confluence to take a position heading to that direction it is pointing towards, right, because of some factors that we will later discuss on other videos that I have to create, right? So but on this one I just wanted to show you how price looks like when it is in a trending nature. So we are making higher highs and higher lows right there. Price broke structure and moved to the upside. Broke structure here, came back and swept the lows, pushed again, breaking structure, came back, swept the low, pushed again to the upside, breaking structure and swept a low right here. So this is how a bullish market one looks like. So price will make higher highs and higher lows, and showing us that sellers are exhausted and buyers have taken the steering wheel. Now they're driving price to new highs or to the upside, right? So when we understand the trending market, now we also need to have an understanding of how price tends to range in one place, right? I just want to minimize here. Remember guys, it's very important for you to make sure that whenever you are analyzing on the trading view chart platform, you minimize the screen, you maximize the screen so that you can be able to identify properly the pivot points, identify all the necessary information that you want to use as confluence for you to be able to identify a direction that you want to be positioning towards, right? Okay, so here we have a range. Remember we said a range is when price is making a series of highs and lows without breaking structure. Then this is what we call a ranging price. Let me remove that. Let's remove that midline. Yes. So this thing that we see here, it's when price is just making a series of lower lows and a series of lows and highs without necessarily breaking structure to a specific direction. So this is where most people get caught and get trapped in the market, right? Because they failed to run proper analysis of price direction or price movement, right? So if you fail to do that, then you're going to become a sheep that is going to be slaughtered in these markets, and you're going to regret for the rest of your life and have emotions tampering with your trading journey, right? We're still going to speak a lot about that psychology and emotions and how to control them, but all of that is going to be entailed on our mentorship course that we're going to be offering, right? So if you want to join our bootcamp and become our student in our master classes, right, you're gonna have to, I'm gonna drop a video or drop a banner for you to be able to subscribe and get the contact details on how to join our Telegram or our Discord channels, or rather our WhatsApp groups that we're going to be running, right? Okay, so for now, just understand that price is ranging, and when price is ranging, you stay away from the market. We do not engage in any trading that just stay away, you do not do anything, right? Because price has not given us enough confluence to enter positions in a certain direction. So this is how a ranging market looks like, and this is how a bearish trending market looks like, and this is how a bullish trending market looks like. So all of these factors, this is what you're going to be seeing each and every day being demonstrated on the charts, being played out by price each and every single day, whether you're trading on the 1 hour chart, whether you're doing it on the 15-minute chart, you're doing it on the 1 hour, the daily, whatever chart that you decide to use, this is what you will see each and every single day. Thank you so much guys for tuning in on this video and actually listening to this information that I had to share with you. Hopefully it's going to assist you in your journey too, so that you can become a very knowledgeable and well equipped trader in these financial markets, right? So don't forget to hit the subscription button, and also make sure that you leave a comment of videos that you would like us to do, or topics that you'd like us to engage in, so that we can grow the channel and expand the knowledge and spread people's wings in terms of understanding market structure and understanding what price does whenever it books each and every single day. So thank you so much for tuning in. I appreciate each and every effort that you guys put in. Make sure that you do not forget to subscribe and return to watch more and more content that is pretty much educational. Remember guys, a disclaimer that we have to make, that price trading the markets is a very dangerous thing to do. Markets, they contain a lot of risk, so you need to trade with caution. So you don't take this as advice for you to go and trade, but rather this is just intended to educate you and make you filled with the right knowledge, so that whenever you decide to engage in trading price, you know the hows and the don'ts, right? The do's and the don'ts in terms of making your trading a success, right? So thank you so much for tuning in. This is Black FX 101, Forex education and mentorship, and I am out. Thank you so much.